Fear and Greed Index stands at 68 today, signaling greed across the crypto markets. This reading arrives as Bitcoin and other major assets push ahead on renewed risk appetite, though traders remain watchful for macro surprises. The index isn't a price predictor, but it can influence entry and exit behavior. Higher greed often coincides with crowded trades and sharper reversals, while fear can slow rallies. In the near term, sentiment suggests cautious optimism, with Bitcoin and select altcoins trading in tight ranges as liquidity stays mixed. Investors should balance their willingness to chase momentum with prudent risk controls and stay alert for shifts in macro data, policy expectations, or liquidity conditions that could flip sentiment quickly. Bitcoin prices eased to around $119,000 today, as US CPI data for July showed a modest uptick. The data underscored tame inflation, helping avoid sudden shifts in Fed policy and nudging risk assets higher, including crypto. The market is watching for continued macro stability to support a broader recovery. In the near term, BTC trades in a narrow range. It's roughly between $117,000 and $121,000, with volatility muted compared to last week. If inflation remains contained and rate expectations flatten, institutional buyers may come back, potentially driving a fresh leg up. Conversely, a surprise jump in inflation could rekindle volatility. Overall, sentiment remains cautiously positive, but the next move depends on macro cues, liquidity, and the pace of institutional participation. BitMine is targeting a colossal $24.5 billion funding round, with Sharp-Link expanding Ethereum reserves. The aggressive fundraising signals a fierce chase by institutions to secure Ethereum exposure, likely tightening available liquidity and pushing Ethereum prices higher in the near term. If successful, the capital influx could accelerate Ethereum buy pressure, supporting a broader rally and attracting more large investors to crypto. The move also raises the potential for greater market volatility as funding milestones get priced in and investors rotate into new equipment for exposure. In the short term, expect outsized Ethereum flows and headline-driven moves. In the medium term, more institutions may adopt Ethereum as a treasury tool. In the long term, a structural shift in crypto funding could emerge. Ethereum whales added about $946.6 million worth of ETH in a single week, lifting on-chain activity and supporting the rally past key levels. The surge in whale buying reflects growing institutional interest and confidence in ETH's long-term value. This is especially true as staking and DeFi use cases attract bigger buyers. In the near term, whale demand can support price resilience and upside momentum. It can also squeeze available supply. In the medium term, continued accumulation could attract more inflows, reinforcing a bullish cycle. In the long term, macro developments and regulatory clarity will matter most. For traders, whale activity is a strong signal of demand and a potential driver of volatility. Watch on-chain metrics and fund flows to gauge the staying power. Canary Capital CEO Stephen McClurg predicts that spot XRP ETFs could outperform Ethereum ETFs, citing XRP's staking-free profile, traditional Rails leadership, and potential institutional demand. The idea could reshape asset allocation. It would offer regulated exposure without staking risk. In the short term, this could lift XRP as appetite for regulated crypto products grows. In the medium term, more ETF filings and inflows may divert capital from Ethereum and others. This could potentially dampen Ethereum price pressure. Long-term, successful XRP ETF launches could broaden access and liquidity, though regulatory hurdles and market fragmentation may slow adoption. Traders should monitor ETF progress and regulatory updates, as such products can drive real capital flows. A heated exchange erupted after Solana challenged Ethereum by citing Nasdaq throughput figures, sparking a cross-chain debate about scalability and real-world performance. The dispute underscores how investors weigh network efficiency and economic security when choosing where to allocate capital. In the short term, there's modest price movement as markets digest the claim. In the mid-term, sustained throughput gains and ecosystem growth on Solana could draw capital, while Ethereum remains a steady benchmark for security and developer activity. In the long term, the debate highlights the evolving infrastructure of crypto markets and the importance of actual network performance for widespread adoption. Caution remains, since hype can fade, and fundamentals matter more over time. A new report maps rising institutional interest in restaking, outlining opportunities to improve yields while maintaining risk controls. Restaking could unlock more capital efficiency for validators and funds, potentially boosting staking economics across networks. It also introduces custody, slashing, and governance complexities that institutions must manage. In markets, the restaking narrative could lift staking yields and support price stability across proof-of-stake ecosystems. In the short term, early adopters may pilot programs, creating incremental demand for ETH and other staked assets. In the medium term, broader adoption could deepen liquidity and reduce selling pressure from validators. In the long term, restaking might reshape security models, depending on network health and regulatory clarity. Cosmos Health disclosed a $1 million Ethereum purchase for its treasury strategy, signaling corporate-style risk management in the crypto space. The move reflects a growing trend of firms treating crypto as a strategic reserve and diversifying holdings beyond fiat and traditional securities. In the near term, this provides support for ETH prices as treasury demand enters the market. In the medium term, larger allocations from healthcare and other sectors could broaden investor bases and spur new flows into ETH and related protocols. In the long term, mainstream corporate treasuries could become a meaningful stabilizing factor for crypto markets if more firms follow suit. For traders, the story signals growing on-chain liquidity and increasing legitimacy of crypto as a corporate tool. expands its institutional offerings on Avalanche with reinsurance yield products and a loyalty points program. This aims to attract institutions seeking yield and risk-managed exposure across multi-chain ecosystems. In the near term, this could boost liquidity and confidence in Avalanche, potentially lifting AVAX prices as institutions test structured products. In the medium term, product innovation may draw more asset managers into DeFi and cross-chain strategies, increasing on-chain activity and capital formation. In the long term, stronger institutional participation could accelerate ecosystem maturation, though competition from other chains remains intense. For traders, this is a bullish signal for broader capital market activity on Avalanche, with upside tied to actual adoption and risk controls. Vivo Power announced a partnership with Crypto.com to offer digital asset custody services, signaling a growing corporate appetite for secure crypto storage. The collaboration could widen the base of institutions considering crypto holdings, reducing friction and risk through professional custody solutions. In the short term, the news may lift confidence and support buy-side demand for top-tier assets such as Bitcoin and Ethereum. In the medium term, more companies may follow. This could boost institutional inflows and price stability as custody infrastructure matures. In the long term, widespread regulated custody could enable crypto to function more like traditional assets. This would expand access to regulated funds and pensions. For traders, custody partnerships reduce fiduciary risk and may underpin a more stable trading environment. Remitix announced the beta Web3 wallet launch date, with pre-sale proceeds near $18.7 million and upcoming centralized exchange listings. The project signals increased retail and institutional attention to wallet infrastructure and onboarding in Web3, potentially driving more activity across wallets and DeFi. In the near term, launch timing and exchange listings could spark positive price action if listed exchanges generate liquidity. In the medium term, a popular wallet may catalyze onboarding, boosting on-chain activity and potentially increasing transaction volumes and fees. In the long term, sustained user adoption depends on product quality, security, and ecosystem support. For markets, Remitix demonstrates continued funding and interest in wallet layer innovations, with a positive tilt if user growth translates into on-chain use. Nasdaq-listed Safety Shot has secured a 10% revenue stake in Let's Bonk.Fun, one of the prominent meme coin launchpads on Solana. It plans to add $25 million worth of Bonk to its treasury. The deal signals traditional finance is moving into meme assets, potentially boosting liquidity and credibility in the space. In the short term, Bonk could see price support from demand and strategic partnerships. Snorter token momentum may gain. In the medium term, more corporate backing could flow into meme ecosystems, increasing market depth for traders. In the long term, meme coins remain highly speculative. Sustainability depends on continued use cases and sentiment. For markets, this is a bullish development for liquidity and investor interest, but it comes with elevated risk. Blue Origin now accepts Bitcoin, Ethereum, Solana, USDT, and USDC for New Shepard spaceflight seats through Shift4 payments, enabling crypto players to spend crypto in new ways. The development underscores the growing adoption of crypto payments and mainstream merchant acceptance. In the short term, a new demand channel could push prices higher as buyers seek exposure to innovative use cases. In the medium term, broader merchant acceptance could normalize crypto as a payments method, supporting steady demand. In the long term, this trend may attract institutional attention and cross-market integration, potentially improving liquidity and reliability of crypto assets. For traders, this signals stronger crypto utility and potential upside from real-world use cases.